Italy has faced economic decline for over 2 decades, a stark contrast to its post-World War II success. Once a manufacturing powerhouse, Italy now sees businesses struggling and closing. Despite youth unemployment hitting a 20-year low, Italy faces one of its largest brain drains. Tens of thousands of skilled workers leave annually, resulting in significant economic losses. From 2008 to 2016, Italy's economy lost an estimated €14 billion due to this exodus. Further losses are expected as skilled workers continue to seek opportunities elsewhere. Italy's real GDP has been stagnant since 2005, with no significant growth in nearly 2 decades. Crises like the 2008 financial meltdown and the COVID-19 pandemic have severely impacted Italy. While other European economies rebounded, Italy remains sluggish. The average Italian's income has fallen by 10% compared to the Eurozone average over the past 20 years. In contrast, Slovenia's average wage rose by 15%, adjusted for inflation, over the same period. Italy's stagnant wages are part of a broader issue in OECD countries. Italy has experienced the steepest drop in real wages among large European economies, highlighting its economic struggles. Despite a GDP of $2.1 trillion, Italy risks losing its global ranking. Italy currently ranks as the 8th largest economy globally, but could fall to 14th place by 2030 due to emerging economies. This decline is notable compared to its past economic miracle. Post-war, Italy grew significantly, aided by the US Marshall Plan and demand for Italian products. Strategic positioning and a booming labor force fueled this growth. However, by the 1970s, political and economic problems began to stifle growth. A key issue was the stagnation of total factor productivity, TFP, which previously drove success. Since 1970, TFP has declined by 13.7%, reducing workforce efficiency. In the 1980s and 1990s, short-term solutions like deficit spending were unsustainable. Poor productivity in Italy is linked to complex labor regulations, judicial inefficiencies, and a sluggish public sector, creating challenges for business development and investment. Studies show firms in Italy suffer productivity losses when operating in areas with low government efficiency. Improving public sector efficiency could significantly boost productivity. Regional disparities exacerbate Italy's economic issues. The industrialized north, with strong industries, contrasts sharply with the weaker agricultural economies of the south and central regions. The north, home to cities like Milan and Turin, is nearly twice as productive as the south. Underinvestment in infrastructure and human capital drives this productivity gap. Demographic trends further compound Italy's economic woes. An aging population and a 50-year low birth rate reduce the workforce size and productivity. With fewer young people entering the labor force and many leaving for better opportunities, Italy faces a shrinking pool of workers, adding pressure on the government. Italy spends 18.8% of GDP on pensions and social welfare, costs that will rise as the population ages, limiting investment in growth sectors like infrastructure. Italy's staggering public debt, at 144% of GDP, limits government capacity to invest in long-term growth. Debt interest payments restrict economic strategies. Without its heavy debt burden, Italy might run a budget surplus. However, slow growth and persistent deficits keep the country in a cycle of borrowing and spending. In September 2022, Giorgia Meloni's Brothers of Italy party gained power, promising economic revitalization. Her government aims to close gaps between government spending and revenue. One controversial reform under Meloni has been reducing welfare payments to scale back Italy's welfare state. Her administration also introduced incentives to tackle demographic challenges. These include increased baby bonuses and enhanced maternity leave. Additionally, bonuses for workers who stay in the force longer aim to reduce pension spending. Despite Meloni's strides in addressing economic challenges, these deep-rooted issues are unlikely to resolve quickly. Demographic and productivity problems, combined with high debt, persist. Italy will likely continue to face economic struggles in the near future. Addressing these complex challenges requires sustained effort and comprehensive policy changes.